welcome to MedHQ's web series. This particular one is going to be centered around budgeting for your ASCs. A little bit before we get into the session and introduce the presenters, did want to say a little bit about MedHQ. MedHQ is healthcare's leading provider of advisory and administrative solutions. So in addition to advisory services, we also provide services related to human resources, revenue cycle services, staffing solutions, and then of course accounting and finance solutions for our clients as well. We do those services for ASCs, hospitals, medical centers, and physician practices as well. So just a little bit about a background about MedHQ, and then also about your presenters today. So next slide. My name is Matt Lau. I am the Senior Vice President of Client Accounting and Finance at MedHQ. I've actually been working in some way, shape, or form on the accounting and finance side for ASCs for nearly 20 years. So I have seen many ASC budgets over the years and consider myself a bit of an expert on the subject that we're talking about today. And Dhara, why don't you introduce yourself as well?
Yeah, sure. Hi, I am Dhara Ravel. I am accounting manager at MedHQ. I've been with MedHQ for over 7 years now, and love working at MedHQ. And so, like Matt said, have worked with a lot of clients, helping them to prepare the budget. Next slide, please.
Next slide. So what we're going to talk about today, our agenda, is really just to go through the entire process that MedHQ has created and kind of customized for our ASCs. And step one is, business planning and setting goals for the next year. Then we're going to talk about the budget process and the template that we've customized as well for that budget, the budget process. And finally, we're going to take a look at our budget review process and overall timeline. So we'll cover all those in the next 20 minutes or so, and hopefully at the end you'll know a lot more about budgeting than you did beforehand. Next slide. So a lot of times, and when I work with ASC clients, a lot of times the default thought on budgeting is, well, we just got to put some numbers down. What's our revenues going to be for next year? What are our supply costs and labor costs going to be next year? What is our bottom line going to be next year? And whammo, that's our budget. We take a little bit of a different approach to creating a budget for our ASC clients. And step one is really, put the numbers aside. Don't even worry about what your numbers are going to be. What do you want to do for the next year? And so we want you to focus on coming up with a business plan and realistic goals for the upcoming year. The way we do that is we kind of we want you to take a really good look at your business from two different vantage points. One, from a micro vantage point, kind of looking internally, inside the walls of your ASC, to look at, what's your current status of the physicians that you have, your physician partners. What is your current specialty mix and current volumes? You look at your equipment on site and go, okay, well, is any of it getting old? Are we going to need to kind of set aside a significant amount of money for replacement equipment? Or are we growing so much that we need to expand our facility? What are your current payer contracts? What are your current vendor contracts? So everything that's kind of within the walls, everything that you can control directly, those are the things that we kind of look at from an internal or micro approach. We also want you to look at macro factors, the external forces that are going to have an impact on the way you do business. And those factors include, competition, payers in the landscape. Are there new ones? Are there reimbursement rate changes from Medicare or for work comp that you have to deal with? Regulatory changes. So those types of things that are definitely going to impact how you do business next year, you want to look at those as well, both from an internal and external perspective. And when you look at, strategically the strengths and weaknesses internally, and then your opportunities and threats externally, you bring all that together, and you could help really create a realistic plan for what you want to do for the upcoming year. And so doing that process, having that really in-depth, good look at that process is really going to guide you as to what you want to do next year before we even think about the numbers. And then once you have that plan, the budget is really just filling in the numbers that support that plan. So that brings us to step 2 here. So next slide.
All right. So like Matt mentioned, once we have gone through all the plans and goals that we have forecasted for next year, what we have done is we have formulated a process of putting into numbers and spreadsheet our budget goals. So to begin with, the lead accountant prepares a template which will require the administrator to fill out these 5 key operational inputs, mainly the case volume, labor hours and rates, fixed expenses, capital expenditures, and inflation factors. These spreadsheets, include the values that we have from the past. So we could either take the current year trend, or we could take a trailing 12-month trend, depending how the ASC is set up. And what we require is the administrator make the changes to those critical key inputs based on the forecast or the plan that you decided in the first step. So, basically, the greater the accuracy of these inputs, your budget will be that streamlined to your plans and goals. And the reason why we break it down to these 5 inputs is because we think that they will make the budget very clear and keep it realistic. They're basically drivers of each section of the budget as you go from revenue to expenses, and again broken down into variable and fixed. So once the administrator has the inputs back, MedHQ takes over, and the lead accountant would send and prepare a tentative budget for you. All right, next slide, please. So let's go over these key 5 inputs that you see. The first one, the major one, would be the case volume. So the lead accountant fills out the information over here, as you can see in column 1, breaks it down by specialty and by physician based on the volume for either the current year or the trailing 12 months. So that would be, so your financial year, let's say January through August, or a trailing 12 period would be like August through July of prior period, if you started your preparation in August. The administrator will fill out the second column, which is basically the change that they expect to see. And this will give us the total volume. Now, what are the factors that we consider in the change would again be the same micro and macro analysis that we did in the first step. So the administrator would be expected to talk to physicians and see how things will change at the center for the coming year. Any big anticipated time offs, any maternity leaves, paternity leaves, any long vacations. Also take into account any new specialties that you might start, any new physician coming on board, any retiring physicians, which would kind of bring down the volume. So all of those factors go into the estimation of case volume. Next slide, please.
Thanks, Dhara. And so you might notice that like our next section here is talking about estimating labor hours and wage rates. And at this point, you may be thinking, all right, well, normally my budget process, fine, yeah, I could start with budgeted volumes, but what about revenues? What about supply costs, that sort of thing? The really nice thing about the process that MedHQ has put together, the budgeting process that MedHQ has put together for our ASC clients, is that we want to focus you, the administrator, on the areas that really drive the business, and that you can, for lack of better word, control. And so when you put in your volumes by physician, by specialty, into the budget, we then, on a MedHQ finance side, we will create formulas, and we will derive revenues from those volumes, from your existing payer mix, from your existing payer contracts. We will create an estimated revenue based on the volumes that you have created for your budget. Same thing for supply costs. We know on average what your supply cost per case is, for pain versus ortho versus spine. We will put that and create a formulaic link so that it converts your volumes by surgeon, by specialty, into supply cost budget. So that way the template works for you. And you could just go right into the next section, which is, hey, we've got all this, we have all these case volumes in the budget. We have to make sure that we have enough labor on our books in our center to support those volumes. And so that's the next step in what we want you to do in the budget process. And so estimating labor hours and rates is really a key part of that. And you could see to the grid to the right there, there's a lot of inputs. We want you to put in the position, the title, the employee, on average, how many work hours do they work a week? What's their current wage rates? And then even after that, it's like, okay, well, that's current. What about next year? What's their pay, on average, what's the pay rate increase going to be? Well, it's a lot of information, but it's absolutely crucial that we have all this information so that we can accurately predict and budget for your labor expense, which is one of the main kind of expense line items in the entire budget and in your entire profit and loss statement. Now, here's the nice thing. Here's the good news. I had mentioned before that MedHQ also provides human resource services to our clients. If you are a client that has signed up for both MedHQ's accounting and finance services and for our HR services, your lead accountant will have access to all of your payroll information straight from the system and can pull this information and populate it in the budget before you even get the template. Before you even see it, we could populate this for you, and all you would have to do is review for reasonableness, put in an increase percentage, and you're done. So while it's definitely a process, and it's an important process to the budgeting, the budget template itself, we could help you out, especially if you're also an HR client of MedHQ's as well. Okay,
that's right.
Next slide.
All right, so after we have tackled the case volume and the labor, we look at the fixed expenses. Fixed expenses are something that we expect wouldn't change so much from period to period. And so, and also they are easily estimated by the administrator. There's something within their control. They would know about it if there's a change expected. So what we have done over here is we have broken down the change portion into two categories. One is by the dollar and by the percent. And also shown the fixed expenses on the side, mainly your medical director fees, your maintenance contract, your rents and utilities, janitorial, your miscellaneous like the insurance and education and development. So what we are doing over here is, as you can see from the first example, we expect that the medical director fees are going to go up by 1,000. So that's what's been put over there. There are some contracts that have escalation clauses, like your rents and maintenance contracts. So over there, we have the ability to do it by percent versus a dollar amount. going down, as you can see. Janitorial, maybe you're expecting that some of your staff, you're going to hire some janitorial people versus, having an outside contract, so you make that change. Maybe you're going to introduce a new specialty, and so your advertising expenses might go up. And those are the kind of changes you would make to this fixed expenses worksheet. Why we have set up as a separate item is because we think that these are the expenses that are not controlled by case volume. They pretty much don't change so much, and so we have kept it as a standalone input operational key in the budget. All right, next slide, please. The next one would be your capital expenditures, your fixed assets, like equipment, furniture, any leasehold improvements that we make, software acquisitions. So those would be over here. What it does is two things. One is it helps us estimate an accurate depreciation in the books. And then the other thing is, if there's any cash flow requirements, big cash flow requirements, then it's something that we can take into consideration for next year. The other factor that we consider is the inflation factor. What we do is we break it down by different categories in P&L, so your direct supplies, your non-direct supplies, net revenue, fixed expenses, other variable expenses. This is basically a macro analysis done by us when we send the sheet. We look at different analysis from outside sources, consumer price index, and other stuff, and we suggest or recommend a percent to you. But what we expect is that the administrator reviews it, because they are directly in touch with vendors and payers. They are more aware of the kind of changes that might happen. So it's possible that the direct supplies next year expected might be an increase of 5% versus a 3%. So those are the little things that they could review and help us get to better estimations in the budget. Next slide, please.
So, once we get through your kind of 5 key areas of inputs that we're going to focus you on, and when we combine that with, all right, you got your operational inputs, and we've got all of our kind of template Excel formulas and links, the next thing we want to do is we want to make sure the end result, the budget itself, makes sense. And we kind of do this in a couple different ways. One is just to make sure from a financial perspective, do the numbers look right? Do they make sense? Based on the cases that were budgeted, do revenues look right? Do supply costs, the labor, everything that we drew a formula that essentially took that input and converted it into dollars on your budget. We want to make sure that those numbers formulaically calculated correctly and make sense. So that's kind of from an internal MedHQ perspective. But then we also want to do an overall operational review directly with our ASC clients and the administrator. And that overall review, we want to make sure that the case volume growth makes sense. The supply cost as a percent of net revenue makes sense. The labor costs, the operating income growth, all of that makes sense. And then, also it's worth mentioning that, to this point, we really have focused on a budget that is for a full year, so the full next year. But we know, being so long in the ASC field on the accounting side, is that, your January isn't going to equal your December. It's not going to be just a linear, you're going to have the same exact month throughout the year. You're going to have seasonality in there. You may have a slow start to the year. January, February might be down, but then March starts picking back up, and your Q2 looks pretty good, but then summer vacations hit, so your July and August maybe dip down. We've seen that. And so what we'll do is we will apply your monthly seasonality factors to your overall annual budget and make sure that those numbers make sense. We will review those to you as well. And overall, what we want to do is we want to make sure that your ending budget at the end of this process syncs up with that step one, that very first step that we talked about, and that's your business plan and your goal setting for the following year. Make sure the numbers support that plan. And once we do, we all feel good about that. That's when the budget review process is over and we feel good about the end result budget. Next slide.
All right. So we've set up a timeline to finish a budget. You know, it's not a hard deadline, but it's something that we recommend to our clients. Just to have the budget prepared on time, and that everybody, you know, before they get busy, end of the year, is ready for review at the board. So the first step, that is the budget, business plan, and goals. We expect that, you know, that should be done in October, where the administrator is talking to all the physicians, looking at everything that might change for the next year, and basically come up with a tentative business plan for the next year. The next process of the lead accountant sending the operational input, the administrator filling it out, and preparation of a tentative budget. We expect sometime in November is a good time for this process to be done. And then review, early December, a good time to get it done, just so that before everyone gets busy with the holidays, we are already done with the budget and ready for the new year to start. All right. I think that brings us to the end of the session. Next slide, please.
Yeah, that's it. So, you know, I'd like to thank everybody on behalf of Dhara and myself. Really appreciate your time. Hope you've gotten some good information out of what we were able to discuss today. If you have any questions, please send them to us. And actually, during our presentation, we did receive a couple. We have a couple more minutes, so you know, let's answer the couple that we did receive now. Dhara, you want to take that first one?
Yeah, sure. Okay. So it says, my ASC had an unexpected change in the middle of the year that made this year's budget meaningless. Would MedHQ help update an ASC budget in the middle of the year? Well, of course, that's what we are here for. We accommodate our clients, and we understand that things change. It's not always going to be the way you predicted in November and December of last year. Things are constantly moving. So yes, absolutely, we can change. It would just trigger the same process that we did the first time around, where we will send the input worksheet and start all over again the process. Another important thing would be that we also, you know, if you think that, let's say the change happens in August and you think that January through July was good and we don't want to change anything in the budget, we can definitely accommodate those last 5 months and make the change accordingly in the budget. And our system can support those kind of changes for sure.
That's right. I'll take the next one here. So I noticed during the presentation that MedHQ's budget template compares the budget for the upcoming year to actual numbers from the trailing 12 months. However, my ASC just opened earlier this year, so we don't have the full 12 months of actual data yet. How would MedHQ's budget process handle this situation? Yes, and it's a great question, and generally speaking, yeah, if you've been open a few years, we have that kind of a baseline in the most recent 12 months to just pull and compare, you know, growth and everything and that. But if you're not in that situation, if you're a brand new ASC, which we have done budgeting for those as well, our typical, there's a couple different options we really will run down with you, and we'll just pick the best one. One is, you know, maybe as part of your de novo startup opening ASC process, that you had maybe a long-term set of projections that was maybe 2-3 years, maybe 5 years of projections that this is what we anticipate this ASC going through. You know, year one is going to be a ramp up period, and year two, maybe we hit a steady state, and then There's a little bit of change, after that. If you've got those types of numbers handy, we could use those as a comparison to the appropriate year of your life cycles, particularly in that ramp up period. So we could, instead of using 12 months of actual data, we could use, this is what we expected to do. We kind of go back to that step one of the process, where what's your business plan? What's your goals for the upcoming year? Well, maybe you already have that set aside in your kind of operational plan that includes numbers, that includes a long-term set of projections, and we could use those as kind of a basis for comparison. The other way we could do it is, well, maybe you started this year and it was January, February, and you ramped up during the first few months of the year, but then you ramped up quickly, and the last 3 or 4 months are really kind of what you expected. Now, the full year isn't going to be kind of a full year's worth of data, but maybe the last 3 or 4 months are exactly where you expect it to be. We can annualize those numbers and then use those numbers as a basis for comparison. So there's a couple of different ways we could kind of resolve that issue and create a good, solid basis for comparison when we're budgeting. But ultimately, we will work this out with you. There may be another option that we haven't considered that I didn't think of right there, but we will work with you to make that work so that your budgeting process is smooth as possible. That I think is probably the last question we're going to have time for today. Again, on Dhara, myself, MedHQ, thank you so much for joining us. I hope you were able to learn some things about ASC budgeting and maybe how MedHQ can help you through your process. If you have any other questions that kind of come to you either during a record, you're watching it recorded, or at a later date, please don't hesitate to contact either myself or Dhara. Our contact information is on that last slide. Thank you so much again, and we hope to talk to you soon. Thank you.
Thank you.